Now on to the housing market. In just a matter of years, it boomed and then it bust. Between the wobbly stock market, efforts now to the subprime mortgage, and the rapid increase in foreclosures, the housing industry has been taking quite a beating. In fact, the flood of foreclosures continues to pour in, and according to the latest report from Realty Track, there were some 179,599 foreclosure filings just in July alone. That's a whopping 93% jump from 1 year ago. The banks are beginning to feel this pinch first and hard. In fact, Countrywide Financial, the nation's largest mortgage lender, has just announced that they're having layoffs in an attempt to try and get back into the black. But as more lenders collapse, the skittish survivors are changing the rules for getting a mortgage. And that's not good news for you first-time homebuyers out there. Here's correspondent Maggie Lake now as she reports on the perils of the purchase.
It's true that there's no place like home, but actually acquiring a home is proving more and more difficult for many in the U.S. The reason? A meltdown in the U.S. subprime mortgage sector. Not only is it affecting those with less than stellar credit, but now its impact is spreading.
You've got people who are maybe earlier in their careers, so they haven't put away a lot of money for a down payment, and they assume they can get 100% financing or 95% financing. Or you have folks who are self-employed, for example, who take home a lot of money, but they don't document a lot of money for whatever reason. And lenders used to love those people, and they understood those people, but those people now can't get loans because the lenders have gotten rid of those type of programs.
Data from the Federal Reserve backs that up. In a recent survey, the Fed found that more than 30% of U.S. banks have tightened standards on subprime mortgages in recent months. A further 14% have tightened standards on prime residential mortgages. And that was in July, before the market turmoil really set in. Since then, the subprime mortgage crisis has turned into fears of a full-blown credit crunch. Banks have become extremely risk-averse, leaving potential homebuyers in a lurch.
We have a client who's a young attorney in New York. He's working for a very prestigious Manhattan law firm. He's making in the ballpark in the mid-100,000s. With his bonus, he's over 200,000. The issue for this gentleman now, again with good credit and good income but no down payment, is that the lenders don't want to do 100% financing, and they really don't want to do 95% financing.
Initially, some viewed the shakeout in subprime mortgages as a much-needed cleansing of the system, a return to more stringent credit standards. But economists say the crisis has now spread well beyond that.
It's not just about mortgages. The mortgage triggered it. But now it's got a life of its own, and now people are looking at all lending practices and any kind of asset and any kind of leverage and all problems, and it's become quite a big problem.
It's unclear how far the effect could spread, both in the U.S. and overseas. But it is causing a great deal of pain for many homeowners, turning the pursuit of the American dream into a nightmare.
Well, it's a topic we've dealt with before. We'll deal with it here and now yet again. And joining me from our Washington, D.C. studio is Donna Evers, president and broker of Evers & Company Real Estate. Ms. Evers, thank you for being here with us yet again to talk about this.
Thank you, Art.
From your vantage point, just how bad are things?
Well, things are bad in some areas, and they're not so bad in other areas, but it is true that this has far-reaching implications. And when you see the Federal Reserve reacting and doing things out of the ordinary, you know how great the concern is. This isn't just limited to the housing market. This spreads out to the entire economy. And when the Fed makes a statement that we now have more concern about recession than inflation, you know that they are very concerned about it, and they're going to do whatever they can to help fix the situation.
Well, I'm hard-pressed to try and find a winner in this scenario, because let's take the example that was presented in the report where people are coming forward and they've got good credit and good incomes, but yet the banks are afraid to give them the money. So the real estate companies can't win because they can't sell the house. The homeowners can't win because they can't buy a home, and the banks aren't making any money. So who wins out of this?
There isn't any, and that's why I say the problem is a very widespread problem, and I think that everybody is concerned about it, and people are going to do what they can, namely the Fed will do what it can to alleviate the situation. I think the stock market reaction was an overreaction in the beginning, and perhaps that will correct somewhat. We sure all hope so. But in areas where you already have a poor economy, it's getting worse. In strong markets, it doesn't have as much of an effect, Art, as it does in markets that are already weak.
Sure. Talk to me about the FHA, and how could they come to the rescue in this type of scenario?
Well, it depends on how much extra leeway they're given. I mean, frankly, there are still plenty of conventional loans out there. I don't want you to think that you can't go out and get a loan. You can, but now you certainly can't get a subprime loan. And if you get a loan where you've got an interest-only loan, you're going to be qualified on what that payment is going to turn into ultimately, which frankly should have been done all the way along.
Well, we know those interest-only the ARMs and the interest-only loans, those have gotten people in all sorts of trouble.
Well, when they've been misused, yes. I mean, they're good for people whose income is going to be going up. But the trouble was that they were taken out by people who had no increase in income in their future. And you just can't do it unless you're pretty sure and you have some really good idea that your income is going to be improving. Yeah,
well, again, we've done so many reports on these adjustable rate mortgages, the ARMs, and the horror stories that people have been telling, how they bought at one price and then it went up to something else.
Right, but our people were told what these were going to turn into. And I mean, unless you know that your income is going to keep pace with it, you're going to see a problem.
Yeah, let's talk about Wall Street. Do they bear some responsibility in this? I mean, when they put out projections and so forth, people go running and hiding. What can the Street of Dreams do to bring back the American dream?
I wish I knew the answer to that, but I think the overreaction to the subprime problem was a real overreaction. And I think that will calm down. Everybody hopes that will quiet down and calm down so that the mortgage people will sort of get back in more neutral ground and they can fix what problems they have.
Well, and you know what, people may tend to think that this is a problem for the poor, but many people who are wealthy and have very nice homes, who have those homes on the market, they're taking a beating too because they're having to drop their prices so drastically that they can't get their money back.
Well, the situation was that in many markets around the country, you already had a pretty serious decline in the housing market. So this certainly doesn't help matters.
Well, here we are, and I think I asked you this once before. I'm going to ask you again. Are you optimistic at all that this is going to turn around anytime soon?
I sure hope so. And the reason I'm optimistic, Art, is because it has such far-reaching effects. You know, when you say, if you're just talking about the housing market, that's sort of a segment of the economy, although it's a very big one. But when we're talking about it bleeding into the stock market and everything, I think the effects are so far-reaching that everybody who can will try and move in and fix the situation.
All right. Well, Donna Evers, I sure hope you're right. And again, we'll have you back again. Hopefully things will be a better picture than they are right now. Thanks for being here.
I hope so too, Art. Thank you.
All right. See you later. What do you think about this? Again, do you have a mortgage horror story that you can tell us? I'd love to hear from you because maybe your personal experience might be able to help someone else. Email me at cn8.tv. Click on the icon for AFR.